Morning, everyone. This is Brad Matheny. Let me get back over here. Today's the 29th of January, almost the end of the month. We're looking at a temporary bottom pattern today. This is... that was an old one. We are looking at a gap reversal pattern, the 29th. We're looking at this. The markets have kind of been all over the place. 609, 597 on that big breakdown. Kind of nice rally back into that move here. Let me spread this out and show you. Get rid of this a little bit. And you can see we rallied up, come back down, kind of filled this gap here. In fact, we've exactly filled that gap. We're off a little bit, 603.94 today. I do believe we're moving into this downward trend. And I do believe we're gonna consolidate today into what's called a temporary bottom pattern. Into a gap reversal pattern. And then we're gonna be looking at a top tomorrow, followed by a gap potential on Friday. To me, that means that we've got a lot of range here, a lot of volatility, essentially into this area. I mean, we're really looking at trying to hold around this area, moving sideways, which gives us a pretty broad range to be able to, actually see price roll. You see the volatility is quite big here on these bars. Today's an FOMC day, later in the afternoon. To be honest with you, like I said, it looks to me like we could, with this gap reversal today and a topping pattern tomorrow, we're more than likely going to see some type of a rotating trend here, coming up and then moving back down and then moving down into that low that I talked about. So we've had this upward day yesterday. I think we're going to be looking at kind of a peaking, so if I come in here hourly, and let's try to do this hourly. Try to show you kind of what I believe is going to be taking place over the next couple of days is, we're going to be looking at maybe a little bit of a peak here pre-market, and then a roll, and then kind of a gap reversal back down into this area, and then basically a roll down into this area, pausing, and then a roll downward into that low that I talked about. So today, I'm looking for a little strength early in the morning. And then I think the entire market's just going to fall apart. You can see we've, technically closed that gap, but we still have this big gap right here that, is pretty much still open. So that gives us a little bit of a window potentially up into the 607 area. We don't have to get there, guys. That gap can stay wide open and we can roll down, from this level here. We can roll down trying to close that gap back over here. So understand that, in my opinion, the 594 is still looking like the target right now to the downside, especially moving into this breakdown. So until we see some real strength here, we're looking at a breakdown. Now, on a secondary note, get rid of all of these lines. We have a new excess phase peak pattern setting up. Rally, pullback, flag. So the rally, pullback, flag of the excess phase peak pattern very clearly setting up here on the hourly chart. That would again indicate that we have to try to break above this upper level right here to determine that we're going to see some upward trending. Get rid of this. And we have this lower level down here. I'll leave this heavy red line just in because that will act as a, I'll draw it for real. Low level right here. And then we have that pre kind of gap level right here in dark red. And I'll get rid of this, copy this, drag that up here. So again, guys, we're looking at this excess phase peak pattern setting up here. And in my opinion, at this point, barring any substantial news, barring any incredible earnings or big news driving the market, which could be, that the Fed lowers rates or who knows, but barring any real positive news, the likelihood of a breakdown moving through the excess phase peak pattern like this into this consolidation and then ultimately into that breakdown period, wrong way, would be a very clear completion of a minor excess phase peak pattern. Okay. This is a little pattern that I've drawn in green compared to this bigger pattern, which I tried to highlight over the last couple of days. We have this pattern here, which has actually moved to new highs. So it's become invalidated. So this is become invalidated. Kind of the way it works. Price established this new high, got above this closing price level. I mean, technically it is still an excess phase peak pattern, but because it got up here, now we would be looking at this if we were to see a new excess phase peak pattern. If we did get this type of move, double bottoming potentially down off of here, which I've drawn before, which is the potential February 21st low, then we would be looking at kind of a low here, rolling up, coming back down, double bottoming, rolling back up out of this. And what we would have here is a big, broad excess phase peak pattern from here down to here, moving into flagging here. And that would become our new excess phase peak pattern, potentially setting up a bigger, broader rotational type of trend. So that hasn't happened yet, but again, I can see it in the works, so to say, and really rolling off of this peak. So it's a big, broad sideways channel that we're in. It consolidates very well into my downward sloping phase. We do have a chance to get down into these lows coming up because of the downward channel down here or potentially even just right down here. Remember, that's 580, 581, 575 down to 567. Not saying it's guaranteed, but could easily happen. Looking for a low down here in this 570, 568 area. And again, what we would want to watch for right now is this breakdown into the February 9th, 10th low. Personally, I think it's going to be in the 584 area. That's my guess. Just right into this window here, this rectangle window here. Where it's going to be ultimately, the markets will tell us. It could be down here in this 575 area where we have this previous base. So it's not uncommon for price to come back down and retest this base. In fact, if you've watched my videos long enough, you'll know that the Bitcoin has pretty much rolled in a sideways channel for months. And like I said, I think we're going to be looking at a pretty solid breakdown in Bitcoin eventually, but we shall see. As far as this goes, my deeper data indicating a breakdown here, pretty much puts it anywhere from 590 on the Deep-V low down to this area, 568, and we'll see how that plays out. Then we get the secondary low back out here around the 21st, which is actually more right in this area. And so we'll see what that secondary low looks like. This is another low breakdown, kind of a low, and I think it's going to be more of a double bottoming here, kind of like here, maybe diverging bottoms. We'll see how it plays out. But ultimately, I'm looking for this breakdown. Today, tomorrow, going into Friday, Monday, I think we're going to be breaking downward back down here into this 580, 582 area. And like I said, I wouldn't get married to too many longs right now. I don't think we have a lot of upside moving into this weakening cycle phase down to this low. Okay, QQQ. We've got hourly again, moving higher. There's our excess phase peak pattern. Broken down, rallied back up, hasn't really filled this gap. Pretty solid little move. Let me check something here. From here to here. Yeah, it's a good solid 50% retracement. So you can see I'm measuring up here from these upper levels down to this lower support level. I call them rejection levels. And it falls right in line with 50% yesterday. So I can tell you that, more than likely we're running into previous resistance right in this area. In fact, I can highlight this as the area and pretty much suggest that we're looking at a broader type of market rotation right now. I'd strongly suggest that the topping pattern is going to roll into some downward trend down deep into this low here. And then we're going to likely, like I said, set up some sort of a double bottom around the 10th here. I'll go ahead and set this up. Around the 10th, 11th in this area. And then a secondary bottom right here. So looking for that rollover. And again, we do have a little bit of a secondary kind of an excess phase peak here. You can see we've broken down here, but we also have that rally on up, coming back down into this type of an excess phase peak, a little minor one. So a breakdown here would clearly indicate a move back down into consolidation, which would probably be a move like this into that breakdown low, and then maybe a double bottom, and then rolling back out to the next peak. So very interesting little breakdown consolidation. Ideally this consolidation low would be in the 500 area. I think that, if we do get this breakdown that I talk about, you're going to look at a move right back down here, which is again, from where we're at now, about a 4% downside move. I'd say roughly the same thing in the SPY. Let's come take a look. We're talking about a move into consolidation, about, 4%. And then we get into that breakdown low down in this 574. So again, we'll see how it plays out. I wish I could tell you 100% for sure that this was going to happen, but the data is there. I read the data. I tell you exactly what I see. And again, if I were to give you an A or B type of scenario, at this point, we are in this uptrend. Stay moderately bullish for a little bit today. Look for that rollover because it's happening or should be happening. And what would invalidate this entire setup is a rally back above this 610 area. Just getting above this high again and continuing to rally upward would completely invalidate this breakdown mode right now. Again, you got probably a 60-70% chance that this will happen over the next 4, 5, 6 days, but not right now. We're in an uptrend. We're consolidating in this flagging uptrend formation, and that is what's happening right now. Ultimately, I think it's going to break down in the future. And that's kind of what I'm trying to tell you is I'm trying to tell you what it's going to do in the future. And today is a gap reversal pattern. So we got to pay attention to the potential that either today or tomorrow with the top, is going to indicate a gap, a rotation of trend. So I think it's more than likely going to happen late today. We'll see. I think we're going to rally a little bit today, not much, but a bit, kind of a melt up trend. And then tomorrow we get a topping. Late today or tomorrow we move into a topping formation, then a big breakdown. Okay, so gold and silver aren't really going anywhere. Starting to move. Oh, now you see, I took a look at them a little bit ago, and now look at this. So silver's starting to make a nice move to the upside, which is great. Gold is starting to kind of consolidate. Gold is up $4. Silver is up 33 cents, about 1%. Would love to see this rally. The gold and silver pattern for today is a flat down pattern. So not expecting much. If we were to get a rally today, back up into this area, I would say fantastic. And again, for gold, that would be the maybe 2,800 today. I doubt it, but if we get any type of a rally here, it's probably going to be gold and metals kind of reverting back to safe haven status. So we come over here, we look at 4 hours, we come over here and we look at 4 hours. These are broader pictures of data. And, I want you to see that gold and silver, back before the election, November 6th, you see here, gold and silver back before the election were at $34, $35 for gold or silver was. And gold was up to 2,800. And since the election happened, there's been a whole bunch of sideways consolidation. We finally broke out of that consolidation and really rallied. Gold is going to break above this 2,800 level, and in my opinion, is going to rally up to 4,700 to 5,500 this year, 2025. Silver has been really lagging, has really broken down into this consolidated channel, and we've just now broken out of that consolidated channel just past this apex. So silver has a very good chance here after this apex move of trying to rally up on out of this area. First, it's got to get above this 32 area. But, the reality here for silver is that, it was up at 35. So it has a chance of moving very aggressively back up to 35. And it's just going to be a matter of time. I've been telling you, for weeks that metals are going to massively rally. And we're just getting into this apex formation. We finally cleared this apex formation. We finally cleared this apex formation here. I'll draw this in a similar format. You can see there's the apex right around January 7th, literally the exact same time back over here. A little late. So what was this here? January 7th. Yeah, a little late. January 22nd, right over here. But there's the massive apex. And here we go. Okay, this is metals really starting to rally back out. And I want you to realize gold's already doing it. Silver is lagging. The move from silver, if gold breaks above 2,800 in the next 2 or 3 days, is going to be really massive. So what is this? Something has got a line. Okay, is that it? Yeah, that must be it. Okay, gone. So again, gold and silver right now, you're looking to try to target, gold's looking to try to target 2,800 plus. We get up to 2820, 2840 on a big strong breakout. Silver should make a massive move up here to 33 and then beyond even higher, back to 35. Once this moves into the real next phase, which will probably be between February and March, it's going to be a very explosive move to the upside. Okay, I can't tell you how explosive. Let's just say blow your socks off type of rally. This is going to be an incredible big move. You know, gold will potentially double by June or July of this year. How about that? Silver will potentially move up into the $45, $50 area by June or July or August of this year. Okay, so very crazy move for metals. And then lastly, we're going to come back over here. Bitcoin moving into an hourly chart, pretty much rolling across sideways consolidation. You know, you can see it right here coming across these lows and then across these highs. So if you look at this big breakdown, we have this apexing pattern. We have this downward move, A, B, C, D, looking for that breakdown back into this area. Really kind of need to see that happen to see that take place. Let me change the color of that. And again, this is a very clear apexing formation. You know, we've broken down from this area and we moved into this consolidation. And like I said, it makes sense. It's following along into my type of a consolidation, this purple line area. Let's see how it goes. Okay, at this point, I'm looking for a move back down to 98,000, consolidating in this channel, then ultimately breaking down. And we'll see how that actually plays out. I mean, breakdown 92,000, rough 300. That's kind of my target right now. 98,000 right here. I'll label it 98.2. Just call it 98. So you have an initial downward target about 98,000 off of this consolidated pattern. Looks like it's going to break down this week into next. And then we have a lower pattern down here, lower target of 92,300. So very interesting rolling pattern here. You can see that the breakdown that I predicted over here came through the apex level with volatility right back down into these low levels that I talked about. Consolidated, rolled back up into the apexing range, stalled, and now we're rolling back downward in this big A, B, C, D, E pattern. So this move down should put us right to this 98,000, then potentially down to this 92,000 area. So pay attention. Bitcoin looks like it's in a bit of a collapsing mode. You know, we've been up as high as these areas just recently, but from where we are in this apex, it's about a 12% downward move. So I think be aware. It looks like we're moving into a consolidated downward pattern. Okay, guys, that's it for now. Go get some. Remember, we're moving through this apexing pattern. We're moving into some potential consolidation before we break out. Remember, my longer term research is basically telling you that the first 5 to 6 months or longer of 2025 is going to be a very difficult market. So in other words, it's a trader's market. This is not an investor market. Investor strategies are going to get chewed up between now and probably August, September of this year. We're really looking at a big rotating sideways market. Okay. All right, guys. Go get some. Talk to you later.